Shit, that's my bad. Didn't have the chat open. How we doing? On Cape, clandestine, husky. Think we're there now. Burnt peanut. Got peanut in the house. Always perfect attendance. Husky, perfect attendance. Yeah, I hadn't even been looking at the chat. I was just looking at the old Standard and Poor's over here. Feeling good, man. I'm just happy we've been shorting bounces for the last 3 months. Feels weird to be not be on by the dip team though, man. I'm always by the dip team, but yeah, tomorrow. We're gapping to I don't know, hoping about 670, 250. Yeah. Nice little Friday ripperina, why not, dude? We had this like wedge that of all wedges, dude. That was so sick. And this was so far out of the bands. What a ripper day. I can't believe I missed that one. One of those days you like just remember forever. Daily bull flag. The market's always in a bull flag. Market is always bull flagging. Hideous weekly candle. Not even gonna hit the volume of last week, I doubt. Who knows? Yeah, we'd have to put up some volume tomorrow to hit last week. Market's always a bull flag. Man. Yeah. All right. Funny start to the year, huh? Just read year to date in March. So that, man. And sometimes when I start like classes and I just start seeing like big red candles, I'm like, can we just have a night with no obscene news coming out? We're getting Market Watch S&P 500 just broke a major support. Don't see that very often. Welcome everybody. We'll give this another couple minutes. How y'all doing? Hope everybody had a good day. We had some fun today in the voice chat, that's for sure. This little like after hours volume candle I was admiring too. Right at that 15-minute after market close. 15-minute after market close, and we put up the highest volume of the day. And it's mostly, buy side at the ask. And someone was like, I should buy 5,199,000 shares of SPY. Sorry, 4,299,000 shares of SPY. Wow, so much winning in the market right now, dude. It's wild. Wild. They're gonna relief bounce us tomorrow. Plunge protection team gotta show up on this kind of a week. Downtrends though. Hey, man, I started telling you guys, hey, this is back end of February. Watch out. You got lower highs in the market. Look at all these green days though. Big green days to make it nowhere. No, no, man. If I'm gonna be entirely honest with you, no, absolutely not. Yeah, okay. So like very beginning, yes. Outside influences on that one though. But I started with shares. Shares are like, fun, easy. You don't uh you don't you don't have to worry as much. So shares were easy. So I learned, and I've been, learning on and off about the market for my whole life, but but shares are easy and you don't have to worry about them nearly as much. Options, whew, big learning curve, big learning curve, easy to struggle with them. Never, ever, ever get down on yourself for struggling with them. But once you build good habits, it becomes much easier. That's where most people struggle is building good habits. Man, I can't lie to you. I wondered the same question. I think that this must have kind of been like one of them sort of pre-negotiated deals. It's not anything sneaky, but it's a really big money passing big money elsewhere. I actually talked about one earlier today. Funny enough, it was NVIDIA when NVIDIA was doing something with XLK. Maybe they were increasing their position, and it was insane. 40 million shares, or you could go back and look. But it happened. I watched it on the tape, and it's just like 40 million sell by and it's just instant and nothing happens to the price. And so, I mean, don't get me wrong, 4.2 million buying of shares times 666 is a lot of money for it to not move, especially when you get something like this on 10,000 volume, but, hey, we'll never know what happened, but it's just interesting to take note that somebody didn't, they wanted to buy right there for whatever reason. Okay, give me one more second. Got to post one more post and we will get to rolling. Oh, look at that. Oh, yeah, look at that. Thanks. So sorry, 1K just actually DM'd me what Unusual Whale says about that. That's a lot, huh? That's insane. But yeah, somebody getting in there in a hurry in massive size. I mean, because it was like, it was like one of those instant gratifications. This guy right here is 5 million volume, that 1 minute candle. Okay, none of that matters now. Welcome, everybody. Hope you're all doing good. Hope you had a good day in the market, or if you had a bad day in the market, no big deal. Dust it off. Come back, fight tomorrow. Well, maybe not come back and fight tomorrow on same day Fridays. Maybe come back on Monday. But welcome. Happy to have you here, Dirty River. Tonight we are talking trading psychology and a little bit of Q&A, or maybe a little trading psychology and a lot of Q&A. We'll see how this all plays out. But tonight, trading psychology is the focus. Obviously, as most of you know, I really like to do these types of lectures anytime we have volatility in the market. And, we're getting like sort of desensitized to it because every day is moving like $5, $6, whatever it is. High VIX, we can expect large movement, obviously. And so with our high VIX, we're getting our large movement every single day. When this type of thing happens, it builds like the worst possible habits you can possibly build when you're trading, like anybody, and don't get me wrong, I'm sure this day was awesome. I like to say I would have been long. There was plenty of reason to be long on this day, but every single person thought that they were the greatest trader on the planet on this day. They ignore the fact long everything and anything. Like when they are buying the entire market, you get long. So everybody feels like a great trader on that day. Then your next day, you get a little pop and proceed to sell most of the day. Same as the next day, little pop, proceed to sell most of the day, big gap down, selling again. Um, you know, People were still chasing the longs up here. That's what these failures are. Down here, I'm sure people were trying to rush into shorts, swing shorts, saying, are we short on the market all day tomorrow? That kind of stuff. And to me, I just don't ever look at it that way. You want to be in there for a part of the move. And so tonight, what I really want to focus on is habits and bias. Um, they're two huge things in the market. Everybody wants to get them. There's a million different versions of, biases or habits that they build or things like that. And we all have to deal with them sometimes. Even myself, um, you know, I have days where I won't be long, or I have days where I won't be short, and that's because of my bias, whatever it is on the market. And that, there can be days where I'm dead wrong. I mean, if we can even look at today, nice sell early, but then a bunch of bouncing in the middle of the day. I traded exactly zero shorts today. I'm just not into being, short down here. I always tell people look left. I start looking at this big candle over here saying we've done a lot more bouncing off of 664, 665 than selling. So as we get down close to there, I'm a dip buyer. Ultimately, shorts worked great today as well. Longs worked plenty of times today as well. When basically every candle is a dollar, it's hard to not make money in this market. And so sometimes your bias is right, sometimes your bias is wrong. Obviously, today my bias was overall wrong. I'm not going to sit here and try to lie to you like, oh, well, you should only be long because of where we are. Short every bounce worked, I mean, as good or better than buy every dip. So, your bias can be dead wrong. But you need to accept it, or you need to know how to, trade it, no matter what. But people always want to build the bias. And it's the number one bias thing that I see, and the number one bias thing that we get from people in here is, a big green candle is oftentimes not followed by another big green candle. A big red candle is oftentimes not followed by another big red candle. And so the number one bias that I see people like build, and what oftentimes leads to one of the worst habits that there is, chasing, is that these trades are going to go on forever. When somebody messages me and talks to me and they're like, oh, I'm in this trade, I'm up blah, blah, blah amount, but I'm not going to sell. I want more. This thing's going higher. That's a death sentence. Like when you say that, the market's topping, like almost guaranteed. You cannot have that confidence. You cannot have that bias. You need to trade your plan. We've all been there. Think how many times we've taken a trade and we've had that same thought, or we've said that same thought. It's unfortunate for some of the analysts to know, myself included. We could even use me. I was in this stupid Apple trade like all day long, finally get the bounce, breakout. Looks like we're going to keep on going. And I was like, oh yeah, we're gonna keep popping, like I felt like we were gonna continue to move up. I did. And I was probably saying that. I mean, thankfully I trimmed. Don't get me wrong, I did get some of them sold. But I was probably saying that while this candle was nice and green, saying, oh yeah, we're gonna keep on going. And ultimately it was basically the top of the bounce for Apple today when I was saying that. So bias gets everybody. We can of course be wrong. Again, thankfully we trimmed to save some money. But don't have that overconfidence. Don't listen to the people that are saying, oh, higher, we're going higher, blah, 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 or we're dumping, we're going to keep on dumping. Those people are oftentimes wrong. They might be able to, claim they're right in the long run. But like yesterday, we had a nice sell in the market. Yesterday, I'm getting asked in voice chat, over and over and over again, are we shorting this? Are we shorting this? And I'm like, nah, I'm not short. I'm not short. So we're buying all of these dips, and trying to catch these bounces. And so we are catching these bounces. All anybody wanted was to be short. And the market's bouncing, $3, $4 against them over and over and over again, trying to short these lows. And then I get a DM from somebody this morning, oh, I knew I should have swung those puts. And it's like, okay, well, fine. Yes, the market gap down. However, you lost money over and over and over again trying to get short at 674. Your bias can be right, but in options, if your timing is wrong, you lose money. And so that's what we all need to work on. And that is something we need to remember in extremely volatile markets is that our bias should be killed quickly if we can. You can look at the big picture, of course, and say, hey, I'm just not short down here. I want to buy dips, or I'm not long up here. I want to short rips because of where we are in a chart. However, when we're trading intraday, at a certain point, you have to admit defeat. If you're a scalper, great. You make if you're like really scalping, looking for those faster trades, 1 to 3 5 minute candles, there's a very good chance that you make money up and down in the market every single day. So obviously this logic doesn't necessarily apply to those kind of people as much. I am those people. You guys know I like to scalp a lot. But if you're a day trader, just holding trades and grinding trades all day and having SPY bouncing, two, three, $4 against you over and over and over again, because you won't kill your bias that the breakdown is coming, um, is gonna be really, really hard for you. And so that bias leads into bad habits. And so what are the bad habits I'm talking about? Specifically, more than anything else, what volatile markets make people do is hold and save them on bad trades. Like I said, when we have a market that's, going from 676 to 680 in a few candles, you know, people are going to hold short and they're going to be blown out. And the market is going to, they're going to be trying to short these lows. They're going to get completely blown out. They're going to hold for a $4 move against them. And then the market's going to ultimately give it back and they're going to make money. And I think that is really trading. I can't tell you guys how many DMs I've got over the last, 2 weeks of somebody saying, you know, I was down 70% and I ended up getting out for 100%. I'm happy I held. And that's just the worst. Like, I hate that. That like kills me. That is so against anything and everything that me or anybody who teaches really trading would tell people to do. I am, of course, happy when somebody, makes money. I hate more than anything in trading when people lose money. So I'm, of course, happy that you made money. However, that habit is what will blow your port. What I have been teaching people to do in this market specifically, and I kind of touched on this a little bit in the class with Toasty earlier this week. Um, you know, I personally really like this kind of market. Volatility's high. I'm oftentimes looking for quick moves in the market. I take my money when it's shown to me, and I don't give too much back when it's not given to me. And so I really enjoy markets like this. However, I trade them a little bit different. And what I do, and what I would recommend for most everybody to do, especially anybody that's, trading same days. Again, I'm not recommending you trade same days or anything like that. Even trading your one DTEs. Something that I think most people need to do is that you need to size down and widen your stop. Like we can look at this, and in a normal market, we can run 30, 40, 50 cent stops on SPY, nothing too big, looking for nice rejections down. Well, when most of our candles are over $1 throughout any given day, a 50-cent stop is going to get tagged all day long. So we need to be able to let the positions work and stick with some of that. Um, but we need to minimize our risk while doing it. One of the things that I always teach people is, you know, our job as traders is to make as much money as we can with as little money as we can. Because, if we are using less, we are risking less and our reward is higher. And we want to do, the smallest risk possible for potential highest reward every single time. So in a market like this, I size down and I widen my stop and say, I want to short this double top up here. You guys know, I'm often going to take the double top entry when it presents itself. Ignore these indicators. They're SMAs. They obviously worked that day. But everybody knows I'm going to short the double top when it presents itself, and I'm likely going to short right here. Well, I know that this market, if it's going to poke over the double top, it's not just going to be like in a normal low VIX market, your 15 and under VIX. It's not going to be a little 20 or 30 cent poke over. It's going to be a buck. These candles move $1 like it's nothing. So we have to take that into consideration. And with that volatility, it has to be viewed both ways. The outsized moves are really, really, really nice when they're going in your favor. The outside moves when they're going, or outsized moves when they're going against you are horrible. It's oftentimes going to be one to one and a half delta against you. And there's nothing we can do about it. We follow our trade plans as best we can, but we still need to be respecting those stops and, doing everything that dictates how we trade so that we don't end up losing more money. So again, my way to do this is size down, widen stop. And so I'm going to short here. And maybe I'm gonna, maybe normally, and I'm just making up numbers, maybe I'm normally gonna put on $500 and I'm only gonna give it 50-cent stop. Well, I know I can't do that in this market. I know that the 50-cent move is likely going to be a buck or a buck 25 move. So what do? I buy 250 bucks worth instead. That way my stop loss can be twice as wide, but I'm risking the same amount of dollars overall as my normal position. Now, we don't want it to go a buck 25 against us, but we need to prepare for it to go a buck 25 against us. And that's where I see people struggling so much lately is they get this bias, oh, big green candles. This market is volatile. It's going to rip, blah, blah, blah. I'm chasing this move. I'm chasing this huge green candle. Oh, what's a double top or whatever, as it's pushing past it and they're chasing this move. And then they get blown out and they're like, oh no, it'll rip, it'll rip, it'll rip. And, they're probably averaging down. By this point, the market's gone $4 against them and then bounces and saves them. That is where these bad habits come from. This double top, if we bought and we closed up here, I'm eating that thing at the end of the trade. Maybe it comes back down, maybe it doesn't come back down, but my maximum risk has been met. If this candle's closing up high, I'm stopping out. This just so happens to be one where it pulled back down. We don't care about that side of it. When we discuss trading psychology, for me, it always comes back to, mitigating losses. Every trader tries to size up and like, don't get me wrong, as your portfolio grows, natural progression, your sizes will naturally increase, but people try to size up, oh, I'm having a good week. I'm sizing up. I think the exact opposite. Like we have on voice chat, luckily enough, we've been like absolutely on fire this entire week. I have a clobbering coming. It's time to size down for me. I'm sizing down. I'll tell you that much. You don't go on runs like this without having one that shows up and hurts you? And so I size down. When everybody thinks size up, they get wrecked. And they should almost always be thinking size down. I get asked the question all the time, when do you go heavy? Never. You should never go heavy in the market. I mean, it only takes one going heavy to not be able to go heavy again because you lost everything. And so for me, it always comes back to size down. Worst case scenario, you make a little bit less money because your position size is smaller. But with how volatile this market is, if you do this, smaller sizing thing like I'm recommending, we're doing that because the market is more volatile. So we know we might get blown out by a buck 50, but we also know a main target for us is going to be $3 to $5 below us. So we know the potential reward is high. That is why, for me, this market is super worth trading. I love trading this kind of stuff. It's not only is it fun, it's definitely rewarding. And so I love trading this kind of thing because those moves are outsized. We also get a size down. So we are reducing our risk. But in our normal scalps, where maybe we're looking for a buck or a buck 25 and we're going to get, one delta on it, we might be targeting, two, three, $4 away on a scalp. And while I would normally encourage people to not have those super far away targets in a high VIX market, an extremely news affected market, our stops can be wider. If VIX is trading 20, 25, 30, the market is quite literally pricing in, a 1% a move day in the market. So we know that we can have that, $4, $5, $6 range in the market, and it will work very well for us. So even though we're sizing down, we are likely, due to the volatility in the market and the outsized moves, going to be making the same amount as we would on a, smaller move scalp with cheaper contracts, all of that, we're still going to kind of come out at the same amount of money, even though our position size is smaller. And so we know with the smaller position size, it is the best thing we can do for our trading psychology because people start getting these biases, they start chasing, they start doing blah blah blah. If their risk is smaller, then they're instantly losing less money and they're able to control their emotions quite a bit better. Where the issues start to come is when you're looking for that reversal move or the bounce move or the drop move or whatever it is, and your confidence is too high and it never shows up. And so when we have our biases or whatever they are and they're too strong and we start losing too much money, the best thing that we can do is really just step away. But the first step to helping us survive to fight another day is always going to be sizing down. I can't emphasize it enough. That's really what I want to talk about to people today, because everybody is so biased in the market right now. They catch one big move in the market and they think they have it all figured out, and then they start getting wrecked day after day after day. And if, we can't, um, you know, something that we always want to think about is, always remember what your trading does for you is only for you. It doesn't matter if the guy next to you is making 10 grand a day or the guy next to you is making $10 a day. None of that matters for our portfolio. So, we're going to see the people in trade floor that are posting, oh, 600% gains or whatever. And they got 5 racks in this trade and they've obviously trimmed nothing and they're just holding it. And people want that. They want those kinds of returns, to just like, quadruple your money. It's just not reality. Always remember you are trading your own portfolio. Maybe that person who's got 5 grand in same day SPY contracts has $100,000 portfolio, and that is just the size that they trade. It can also be that person with $5,000 in same day SPY contracts has a $5,000 portfolio and they put all of it in one trade, and that's how they trade. They won't last long, but none of that matters for you. So just pay attention to what you're doing, your position sizing, your risk management, and understanding what the market has to offer you. Obviously, when I teach stop losses, which are going to be the huge part of your risk management and all of this, because when you have big moves, it feels weird to stop where you're stopping. It feels like you held too long, or, you want to keep holding because it might pull back. Well, when we are using our stop losses, we want to, you know, we want to be aware of where those are so that we can know exactly how much money we're risking. That's going to be, one of the best things for you and your portfolio in a pretty crazy market. We know that if we know how much money we really have on the table, like we can just use this. Again, I'm going to make up some numbers. We're trading at the money SPY puts at this double top. We're going to have 40 delta. We know that it's going to buck 50 against us. Worst case scenario, that's our hard stop. Well, if we have 40 delta and we're risking $1.50, we have $60 per contract risk on this trade. Do that before every single trade. You should be doing that anyway. Non-volatile markets or not, you need to understand how much money you're actually risking because even it might be an alert from me or somebody in here or whatever it is, and if you have a $500 portfolio, I know I've been trading a lot of IWM to kind of get around it lately, but maybe if I alert the $120-$130 SPY contract, maybe it's just not for you right now, and that's fine. Don't worry about missing trades. Like I said, every candle of the day is giving you a dollar move. There's a lot of money to be made at a lot of different points throughout the market, or throughout the, trading day. And so don't get hung up on what these other people are doing. Don't go chasing these moves. Don't go building the bias. Don't get sucked into the we're going higher, we're going lower nonsense. Just trade your portfolio. And if you're trading one contract, great, no problems. If you're trading 20 contracts, great, no problem. Just know what you're actually risking. And then learn enough about this market. I'm not telling you to go study VIX. In fact, I highly recommend you don't go study VIX. But learn about this market, learn how this market moves, understand that the moves are outsized. And I'll tell you what, you can take a smaller port on a heater in a market like this on one contract. So don't get too hung up in, what everybody else is doing. Try to, have some fun, accept that this market's going to be super volatile. Some of our losses, we might get clobbered. Some of our wins, we might print huge. This is what we wait for in markets, you guys know I love day trading and scalping and ranges and all of that. When we have shifts in market structure like we're having, I've been discussing SPY with you guys for months, telling you since back here, Christmas time, this price action's getting bearish. I'll tell you what, like I'm no longer a dip buyer up here. I've been harping on you guys 3, 4 months about it now. When we have a dramatic shift in structure, and what do I mean by that? Grind up, night, rather excessive for what was going on, but grind up to road to nowhere. If you want to be technical, since October, we've got nothing. We're red year to date. Well, we've had this nice long consolidation that now market's trying to confirm under it. This is a shift in structure. This is market setting lower highs. This is us, you guys know I've been preaching to all of you, short any of these bounces to 690, any chance you get. I've been preaching it. Then it turned to 685, even short all of those. We're finally getting this attempted breakdown turnaround in the market. I'm not saying we're going to crush, past the 660, anything like that, but we still have our 650 lows over here. Not saying, end of the world on the market, but for me, we're now at the proving point where do these bears really want to give us a breakdown, test some of these lower levels for the first time in, 4 months or whatever it is, 5 months, or are we going to take the bounce off of here? So exciting point in the market after some nice, loved it. We've had a lot of fun last few months. We love these ranges, makes it super easy to know where to long, where to short. Been great. But now finally kind of getting some excitement in the market. Maybe we dump, maybe we get a rip back towards highs, but we have some more meat on the bones for these trades now. So with that, that's really all I have on trading psychology. Well, I had a couple more things, but I want to open up to all of you. These ones are always much smaller classes, unfortunately, even though they're the ones that everybody needs. Any questions about trading psychology, swing trading in markets like this, day trading in markets like this, whatever it might be? Let me know. Oh God, I was not looking at the chat. Yeah, take profits, not screenshots. That's great advice, Farida. Don't start thinking. I'm assuming you were saying that I was talking about people saying, "Oh, it's going higher, it's going higher, it's going higher." Yeah, maybe, or maybe it's going to crater. And sometimes that happens. I launched my iPhone and closed. They didn't bounce it. They did not bounce Apple. That is the worst stock in the S&P 500. Yeah, every bearish hammer was a green candle at some point, and that's what I tell people, man. You never know what's going to happen between point A to point B, so the best thing you can do is just click them sell buttons. Let's see. They're all. Yeah, that is a great thing, and Heavy brought it up, and really is a huge part of trading psychology. Not getting too hung up on, if you are a swing trader, especially leaps, like leaps are nothing more than glorified shares, so treat them as such. But if you're swing trading, it's really easy to see some news come out. And, this was actually, so we are going to talk about this because this was one of the things that I was going to talk about as far as bias. It's really easy to see some news come out and think it's the end of the world. Oftentimes a news candle dump is just a dip to buy and it's going to rip back to it. So he's talking about swing trading here, and it involves day trading and scalping as well. So news. and this is like, I'm not trying to be mean to anybody, but we see it in trade floor all the time, people talking about, inflation data or jobs data or whatever it is, and you know that they don't know, or earnings reports, you know that they don't know anything about those pieces of data. And I encourage all of you to be aware of data releases, news releases. Of course, sometimes they're going to come out of nowhere, especially lately. So you can't really prepare for those. But be aware, inflation data is coming out, jobs data is coming out, manufacturing data, whatever it might be. I'm not telling you to go learn about it if it doesn't interest you. There's really no point. Oftentimes, news is going to give you a quick 2, 3 candle reaction, and you'll find yourself back where you started, or maybe it'll keep selling, but you've missed the move. So there's no point in worrying about it. But you don't need to go study. You don't need to go learn, but you do need to ask yourself, do I know what this means? And again, I repeat, I'm not trying to be mean to anybody. It is fine if you don't understand it. But if you don't understand the data, don't assume that you know what the market is going to do based on that data. The greatest example of it is earnings. We hear it all the time. Oh, they beat earnings and it went down. Well, that's because you looked at EPS and revenue, which at these points, and I get it, they're the ones that all the Twitter people and everybody are going to post. That's what you're going to see first. Well, those are oftentimes two of the like less important things, at least in reputable companies. Most people don't really care about that. Some long-term investors might worry about EPS a little bit, but not really. Every single stock is different. I'll use one that I love, AT&T. The market doesn't care about their EPS or their revenue. They're a safety stock. They've been around forever. They make billions of dollars. Like everything's going good for them. They care about their debt and they care about their subscriber numbers. If debt is going down and subscriber numbers are going up, that's what they're going to look for on something like an AT&T earnings call. Amazon, what do the AWS numbers look like? That's what investors care about because they're putting so much money into it. So never get too hung up in biases or worries or anything like that from news. And if the move isn't what you expected from that news, go read a little bit deeper into the news and ask yourself, like, why did this move happen? And so that was like with Microsoft, I think it was their Azure numbers went down. And so obviously, as I recall, it was a double beat. Maybe it wasn't a double beat, but Microsoft has done anything but love life. Yeah, big beat on EPS. I don't see Rev right there, but big beat on EPS to then proceed to sell. I mean, that thing was down 25% at the lows. So don't get too hung up on news. And if you don't know what it means, don't worry. Just don't care. Yeah, people in this market size up in yellow and get bigger positions and then they lose it all. Yep, exactly. Exactly. Size down, not up. Yeah, and FOMO is a killer. FOMO is a killer. But you've seen, Schwartz here in VC and plenty, and there's a great way to do that. Like so, and I'm not like encouraging this for people, but anybody who's been in voice chat with me has heard me do it. Buy one contract. Like you guys have all literally heard me say, I'm gonna buy one contract to see if I'm right. Might be a good idea, might be a bad idea. But if you just have to get in a trade, like you can't, the FOMO is getting you and you can't resist and you need to be in there, buy one contract. Scratch the itch is the best thing you can do. And then if you take a loss or you're right, whatever, it doesn't matter. You can scratch the itch, but you'll only chase a couple candles in this market before you take a couple of stop outs, and that FOMO will be dead instantly. You'll learn the lesson quick. Yeah, exactly. Exactly, Raphael. And don't wait to be wrong, then size down. Size down, and just size down. And that's what I recommend to everybody in this is, you know, like like you'll make just as much money in a market this volatile. You know, you will make on 3 contracts what you would normally make on 6 contracts just because the moves are so big. So like just give it a try. You'll also notice your emotions are way down. Don't get me wrong, sometimes you'll catch a ripper and you'll be like, "Oh, why don't why don't I have my full size position?" Well, it doesn't matter. There's going to be another and there's going to be another. Always, always, always. So just don't even worry about it. Yep, and Raphael always buying time. Buying time helps you relax a little bit too. Yeah, dude, trade report, not the guy next to you. It doesn't matter, you know? Like the most rookie question you can ask somebody is how many contracts did you have? Like it's none of your business. Like and like not like, not that it like makes anybody mad, but like it just doesn't matter. Like it's total waste of time to even ask the question, you know? Like just be happy somebody made money or be sad for somebody that they didn't make money and like, their port's not your port. So don't ever worry about it. Yeah, market likes to bounce on news. Yeah, GameStop gets people. You guys know me. I generally speaking always tell people to not go in GameStop. There's no point to go in there, you know. Great marketing tool. I get all of that. Mute it. Yep, mute it. I got it muted. If you got, I mean, don't get me wrong. I, of course, really appreciate it when you guys like tag me in there, stuff like that, you know. And if you want to post your gains in GameStop because you're stoked on them, have at it. But don't be the person scrolling it, you know? Like, don't be the person like looking through Gains tab. If you're proud, post it and know that other people are scrolling through it. But like nobody cares about somebody who like, you shouldn't care what somebody else made. You can tell them, congratulations, sick day. That's what I tell people when they tag me against tab because I'm stoked for them. Like I want you guys making money, but don't, get into gains tab and then see the person who's like, you know, the $8,000 gain on Robinhood. They have 3 cents of buying power left. Their chart went like the port was minus 90% at one point and it got saved, Don't be that person. Don't worry about that person, like, don't get me wrong, I love to see the vertical down, vertical up Robinhood chart just as much as everybody else, but there's no reason to get like hung up on what other people are doing. You're in this for yourself. Your only goal in trading is to be have more money today than you had yesterday. Even if it's $1, good job. You're beating the odds. If you had a green day, you're beating the odds. So, good for you. Yeah, GameStop really is for the temporary OT people. Like you totally will. You'll see the people in there that hit like 15 grand and they'll post it a few times and then they are gone forever. And I will say we had a losses tab and like we're fine with that. We all take losses. Like I post screenshots when I'm deep red on things, just like everybody else gets them. Um, the issue was like it wasn't about accountability or like, just showing like what you're dealing with. It'd be like, well, I was in these contracts and I'm down 90% and nobody told me to cut my loss. And I'd be like, well, who alerted that? And they'd be like, well, it's my own trade. And I'm like, well, it's not our fault you're down 90% on your full port. Like, that's not my bad. And so, like, if it could have been better, I'm all for it, because, like, that's the thing about trading is that losses are very, very real. They're a big part of trading. They happen every day. I got stopped out on a trade today, like, it happens. Losses aren't something you should be ashamed of. Well, I mean, if you lose your whole port in one go, it's probably something you should be slightly ashamed of and not do again. But for the most part, losses aren't something to be ashamed of. Losses are just a part of trading. And so like I tell people like losses are great. Like you learn from them. Okay, I'm not going to do that again. And as long as you keep them manageable and shocker to wrap back around to this, size down, um, you're gonna be fine. Living to fight another day is all that matters. I tell people all the time, sometimes you're in a trade and then you take a stop out and you lose your, I don't know, whatever, 20% or whatever. And then, uh, you know, you have your stop out for 20% or whatever. And then an hour later, you look back and those contracts are minus 99%. And you were like, wow, I dodged a bullet. That feeling to me oftentimes feels better than like a good winning trade. Like knowing that, like, okay, I exited and I lost money, but I would have lost all of my money if I didn't make that choice. Such a good feeling. Stopping out and knowing that you saved the port can feel so, so good. It's You have to learn to respect those stops if you want to be consistent in this market. Let's see. Let's see. Yeah, Byron screen. I respect Byron for the vertical screenshots, and even I respect that. I do. I respect that. Like, we all know he ain't trying that hard, so like I don't even have to feel bad that he's losing money, At least he's honest. Yeah, Perito, we tend to have the same ones in here most of the time. Average up or down and manage a position. Well, um, don't average up. You shouldn't average up. Um, well, I mean, if you have shares and you're a long-term holder of a company and you're adding to a position, great. It's going to be different for everybody how you do that, because you want to add shares on deep pullbacks on, companies that you love. And so, maybe it's a 5% or 10% pullback that, you hold Microsoft. And anytime Microsoft pulls back 5 or 10%, you can add to that. Obviously, Microsoft is going up over time. So maybe your first buy is at 100 and then 200 and then 300, as it's on those pullbacks. That's what you want to do for averaging up. Averaging up an option, never. It should basically never be done, in my opinion. If anything, you roll out and up because you want to maximize the return from your options. And so you don't want to be averaging up on them. We know that deeper in the money become more expensive contracts and delta moves you faster. But we know as far as a risk reward standpoint, it's really those at the money contracts that give us the most bang for our buck as far as return. Of course, if you run something from way out of the money to way in the money, your percentage is going to be gigantic. But as far as averaging up an option, I would virtually never recommend it. If anything, say you're up $1,000 profit, you cash that, you roll $500 into a new contract. So you got 500 in the bank, you got 500 in the position, and you leave yourself in a no loss situation. Obviously, I'm not saying, sell your call, instantly buy another call. Like, sell your call, get yourself a pullback, even if it's not as deep as want, and rebuy. That's always going to be the best way that you can do it. As far as averaging down, there's definitely a time and a place. I think, and you treat it like any other trade, I mean, say you like, I don't know, maybe this is a terrible example, but let's just slap a 400 on here too. Say you buy Microsoft break over 405. Okay, you think Microsoft's going to go break over 405. You get a couple nice moves, but you want more out of it. Well, I'll add more at 400. Here is the deal with averaging down, even with swings, anything like that. And again, I'm not just going to average down the second it hits 400. I want to see it consolidate. I want to see some buyers show up, blah, blah, blah. If it wasn't part of my plan before I entered, um, if it then I don't average down. It's not allowed. If it's not in the plan, we don't add to the position, no questions asked. Then our average down spot needs to be as close to our stop out as we possibly can. So say, let's say our stop would be 399. Well, we can start buying on this dip to 400 because we know it's strong. So we can start to, be buyers down here. Well, the closer to our stop we can buy, the more we reduce our risk on our ad on that position. So you're only averaging down if it's part of the plan. And you only want to average down when you wind up very, very close to your stop out location. Well, then that's where management on the other side comes. Talk to any good trader, Tilio, Shark, any of those guys. You aren't averaging down a position to make more money. You're like, it's not about increasing size. It is about reducing cost. So, most people, myself included, if I bought at 405, I'm adding to them at 399, I get my average to 40.5. I know, options, I'm just kind of winging, what the price would be. My average, I need to get back to about 40.5 and we get over it. Well, I'm selling some of my ad. Barely green, 5-10% green. I'm selling some of my ad because now my cost basis is dramatically reduced. So I don't get it. I'm not making extra money by having more contracts. I'm making extra money by having a better cost basis. So that's how I think most people should treat averaging down. It's not about having more contracts and making more money. It's about reducing your cost basis to a better price and then still getting yourself back into your reasonable position size where you feel comfortable. That's how I think averaging down should be treated. And then as far as taking profits, those targets need to be had before and they need to be reasonable. And those targets need to be had before you put on a trade. You can't click that buy button if you don't know where you want to sell it or stop out of it. Those are what you need to know before you click buy. So we could have bought this break and retest to 405 and maybe our target was 410. Well, you should probably trim as you get within a buck of it, but our target wasn't hit. So, there's a chance we haven't sold. I think your target should be closer than $5, but there's a chance we haven't sold because we didn't hit these previous highs where we were targeting or whatever it was. So that's how I am always going to treat any trade. If I'm going to average down, then I better know that before I take the trade. I will say in scalping, it can be slightly different. You might hit some calls, you get the like out of nowhere one candle that pays you like 20-30%. So you trim some of them off, but you come right back to entry. Well, if you're right back to entry, add back. If you liked it there, then you should like it again. And if it's one of those just quick volatile candles, like we got lucky on one of those today. I think it ended up hideous. This one, we caught this long. And so like we sold a bunch. Thankfully we didn't buy more because it was a lot of percent. But we caught this candle and then ultimately it came right back down. Well, I felt comfortable enough buying at this trend. If we would have just come like right back to where we started, I probably would have tried them again. But since we had bought back here and then catch the really nice rip, we just kind of went for it that way. But you can always feel free to add back. Or we come back here, you loved it here, well then you should love it when it's a double bottom over here and buy this for another bounce. No, fancy. I mean, well, no, I put more weight than it when trading the ETFs. I put more weight than anything on the big names in there. SPY is SPY or KQQ. They get the second. Their levels are second to what are the big names doing. But nah, man, levels always levels. Even if they aren't major ones, like I'm just gonna view this as a double bottom. Like to me, no matter how you add this up, this is a double bottom. I don't have a level at 598, but I know that this is the level where I want to be a buyer you know. Um, yep. But always the charts, just always just let the charts tell you what to do. I mean, obviously, like you guys heard me off the open, like I wasn't there today, but um, super early. But I was saying, oh, I would have shorted this breakdown right here, no questions. With this retest, we would have shorted this one, and that's all levels. I'm sure if we looked at the big picture on most of the other big names right off the jump. Yeah, Apple was supporting it, or well, supporting the sell. Yeah, Microsoft pop and sell, big wicks up on the highs there. Nvidia hardly even had a chance. Amazon, tried to pop a little better, but it was one hold up and then boom, once the creator starts. And we can see all of those popping up to resistance. So then once the creator starts, we get to crushing. But yeah, price action, price action, price action, price action. What do the charts tell us is always what we want to know. And that's why when I'm looking, when we're trading in there, you guys always hear me mention Apple, Amazon, Microsoft, Nvidia, XLF, XLE, because those are what I watch to make my judgment of where those things are going to go. Of course, don't get me wrong. When we come out here on the big picture, I wonder, when we come out here on the big picture, we can still pull these things up. Well, I guess these are fibs. This is a random one. We can still pull these things up and say, I know where I don't want to be short, and it's really right down here. Like I don't feel too comfortable being short down here. So we use our big picture, of course, on the S&P to know where we're going. But we know once we've seen that big heavy sell in the morning down to a spot where like, phew, look at what we did over here last time. Moon mission of a lifetime. So I don't want to be the person who's short down into where we exploded the time before, you know? It's actually a nice pop on spot, huh? So any more questions, comments, concerns? If not, we can always call it right now. Otherwise I got a few more minutes to stick around, but if not, we can always call it. Purito's got a question. Yeah, thank you, clandestine OG being here. Been 14 business years since I've seen that guy missing. Brito, what's your question? Yeah, you should fire whoever's stocking those trucks for you for sure, if that's your question. What I think tomorrow will be like, up. That's my hope. I know I just told you to not listen to guys that told you higher and up, but my hope is up. No, it depends. No, because I'll tell you what, the big red candles that I would buy, Brooks would not sell. He would not like. Here's one right here. Big red candle. Everybody looking short. Brooks is gonna look left. He's gonna call it some sort of. He's gonna call this, big red candle. People think the market's about to crush. This is a great one. Three push wedge into a higher low slash double bottom. This is honestly major trend reversal setup. For Brooks, if he was looking to be short, he would be short under here. Um, uh, me, risky. I'm looking along this for sure because I view this as we've sold to 660, 760. We got a buck risk to low a day, and we got pushing $3 risk back up to the highs. Yeah. So there's times and places I'm never gonna do it. But there is things that Brooks would short. Brooks would probably short this one. Nice bearish candle, you know, wick on the top, closing below the midpoint, closing near its lows, short one tick below, looking for previous lows. Uh, like there's times and places for it, but I still never do it. Another thing with Brooks, he's talking futures most of the time or shares. They are much less nuanced than options. When we talk short in the rip and buying the dip, there's beyond the fact we are reducing our risk by doing it, we are also, buying shorts when they're the cheapest. So like, you know, a futures trader, they can look at it and say, two, three ticks or whatever, and no, okay, I got whatever it is, 15 or $40 risk or whatever. Uh, an option trader, 10, 15 cents can be 10, 15% on a contract. So our entry on options is much more important for how I think about things. Futures traders, they're just glorified share traders. Don't let them trick you into thinking they're anything fancy. They're just trading shares. Uh, that's so funny. They're just trading shares. So they get to treat it like shares. Of course, don't get me wrong, heavily leveraged shares. But they're just basically shares. And so, options traders, we need to be a little bit pickier. I will on occasion use a buy stop. That's what it's called, where you'll buy on a break of something. Like this is honestly one, like we have a three push wedge. We have a higher low setting right here, but we push up first. We can look for a pullback. And Brooks might buy here and he might be prepared to buy more lower. Or he might put a buy stop one tick above this wick to try to catch the breakout candle. So there's a bunch of different ways to trade, but we as options traders benefit a lot from buying pullbacks or shorting rips if we can. So, wow. Someone just wanted to go risk on there on the old biddy. Okay, well, that is going to do it. Thank you so much. Yeah, fancy posts and pro trade floor a lot. Yep, yo, yo, thank you. Yeah, thank you. Thank you all. If that's going to do it, perfect. We will catch you all tomorrow. Friday fun day and voice chat. Probably going to lose some money with you guys. Can't even wait, dude. It's going to be a good time. And we will catch you all in the morning. Have a good one. Thanks.